As of this moment, Sunday, May 10th, 2026, the market is closed for the weekend. The last active trading session for IREN Limited concluded on Friday, May 8th, 2026, with the stock finishing the day at $61.20. This represented a substantial intraday jump of $4.35, or roughly 7.65%, after the stock opened the session at $63.85 and carved out a wide trading range between $57.91 and $65.61. While the headline number shows a gain, the real story lies in the massive volume that flooded the tape, with over 110 million shares changing hands in a single session. This is significantly higher than the average daily volume, signaling a violent repricing of the company following its recent quarterly results and a massive strategic shift that many retail traders are still trying to wrap their heads around. The typical market narrative suggests that when a company misses revenue estimates by 34% and reports a net loss that widens to nearly $248 million, the stock should be heading for the floor. Most investors look at a $144.8 million revenue print against a $220 million expectation and see a failing business. However, the reality of the IREN stock movement on Friday suggests the exact opposite. The curiosity loop here is not about the loss, but about who is footing the bill for the future. The expectation was a struggling Bitcoin miner dealing with high energy costs, but the reality is a massive transition into a vertically integrated AI cloud provider. The most shocking insight that the market is currently digesting is the $3.4 billion contract IREN just inked with Nvidia. This is not just a hardware purchase, it is a 5-year managed services agreement that effectively turns IREN into a primary infrastructure partner for the world's most important chipmaker. When you look at IREN stock through the lens of a platform like Robinhood or SoFi Invest, you see a high beta name that swings with the price of digital assets. That is the common ground most people stand on. They think if the coin goes up, IREN goes up. But the deeper take, the one that is currently forcing institutional desks at Fidelity and Interactive Brokers to rewrite their models, is that IREN is no longer a proxy for crypto. By securing 5 gigawatts of power capacity and partnering with Nvidia for its DSX AI factory architecture, IREN is positioned as a landlord and utility for the intelligence age. The market on Friday looked past the $140 million non-cash impairment from decommissioning old mining rigs and focused entirely on the $3.1 billion in annual recurring revenue that is already under contract. For anyone doing their own online investing or using investment help from a professional advisor, the tension between the balance sheet and the order book is where the opportunity sits. Individual brokerage accounts are seeing a flood of interest because Nvidia didn't just sign a contract, they took a massive financial stake. They have a 5-year right to buy 30 million shares at $70 each. When a company like Nvidia essentially places a $2.1 billion bet that your stock will be worth more than $70, it sets a floor on expectations that most retail traders are just now beginning to notice. The trading platform activity shows that while the bears are shouting about the quarterly revenue miss, the smart money is looking at the 1.4 gigawatt Sweetwater 1 site in Texas. This facility is the backbone of the Nvidia partnership, and its energization is the real catalyst for the recent price action. Comment below how many shares of IREN you currently hold, or if you are waiting for a pullback to the 50-day moving average before entering. We have to talk about the trading volume and institutional activity, because that is where the movement really starts to make sense. When you see 110 million shares trade in a day on a stock with a $20 billion market cap, you aren't just seeing retail flippers on the Robinhood app, you are seeing massive block trades and institutional accumulation. Many of these firms are using the Interactive Brokers platform to navigate the volatility, but the underlying trend is clear. Hedge funds have been quietly increasing their stakes. We saw firms like Miller Wealth Advisors raise their positions by over 200% recently. This suggests that the investment sites that track 13F filings are going to show a massive shift in ownership toward big money players who value infrastructure over speculative mining. The transition from a Bitcoin miner to an AI data center giant is expensive, and that is the primary risk. IREN is burning through cash to build out liquid-cooled capacity at its Childress facility and the massive expansion in Sweetwater. They are looking at $3.4 billion in annual recurring revenue by the end of 2026, but to get there, they need to survive the capital expenditure cycle. This is where self-investing becomes tricky. If you're managing your own individual brokerage account, you have to weigh the high debt load, specifically those convertible notes, against the projected cash flow. The company did generate an adjusted EBITDA of nearly $60 million with a 41% margin, which proves they can be operationally profitable while they build the future. To understand what IREN actually does today, you have to look past the stock ticker. They are essentially a power company that happens to own thousands of GPUs.
They find renewable-rich regions in places like Texas, Canada, and now Spain through their recent acquisition of Nostrum Group, and they secure grid-connected land. Once they have the power, they build the data centers. While they started by using that power to mine digital coins, they are now using it to run Blackwell systems for AI training and inference. Their business model is becoming more about managed GPU cloud services and less about the hash rate. This is why you see comparisons to companies like Applied Digital or Cipher Digital, but IREN is moving at a scale that few others can match. Looking ahead, the future for IREN stock is tied to three main catalysts. First is the successful ramp-up of the Nvidia DSX AI factories. If they can hit their deployment targets for the 150,000 GPUs they have planned, the revenue will start to dwarf the current losses. Second is the potential for Nvidia to exercise those $70 warrants. If the stock nears that price, the market will treat it as a foregone conclusion, providing a massive capital infusion. Third is the expansion of their European footprint. The Spain acquisition gives them 490 megawatts of secured power in the EU, which is a market hungry for sovereign AI infrastructure. The risk, of course, is execution. Building 5 gigawatts of infrastructure is a massive engineering feat. Any delay in power connectivity or a shortage in liquid cooling components could send the stock back towards its 200-day moving average. For those using Schwab Intelligent Portfolios or other robo-advisors, these types of high-growth infrastructure plays often get overlooked until the valuation becomes undeniable. But for the active trader using the Fidelity mobile app or Robinhood, the daily swings provide the tension that makes the stock a favorite. The expectation was a miner struggling in a post-halving world. The reality is an infrastructure titan that has caught the eye of the most important company in the world. Whether you are doing online investing through a traditional firm or a modern fintech app, the narrative of IREN is being rewritten in real time. The contrast between the disappointing Q3 revenue and the massive Nvidia deal is a perfect example of why looking at a single earnings report isn't enough. You have to look at the assets, the power, and the partnerships. As we look towards the next opening bell, the tension remains high. Will the momentum from the Nvidia deal carry the stock through the $70 resistance, or will the weight of the quarterly loss finally pull it back? The authority on this stock doesn't come from guessing the next day's price, but from understanding the massive shift in their core business. IREN has moved from the fringes of the crypto world into the dead center of the AI build-out. That transition is volatile, it is expensive, and it is incredibly fast. But if the reality of their $3.4 billion contract holds true, the expectations of the bears will likely be proven wrong once again. The depth of this analysis shows that IREN is no longer a simple play. It requires a sophisticated understanding of power markets, GPU lead times, and institutional sentiment. As you manage your portfolio, whether it's through Fidelity Wealth Management or your own self-directed account, keep a close eye on the Sweetwater energization. That is the heartbeat of this entire operation. If the power stays on and the GPUs keep arriving, the current valuation might just be the beginning of a much larger story. Final thought for the day. The market has clearly voted yes on the transition, but the real work of building those data centers is just starting. Stay focused on the execution, not just the headlines. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.